if you're listening to me and you're not from Nigeria, you need to understand the tax laws that are available in your country. It's when you know the laws that you know how to fulfill them, how what to do and how to go about it. In Nigeria, when it comes to financial issue with small businesses, your taxes goes to, if you're registered as a limited company, now you can see that understanding business registrations to now help you to know the kind of taxes you pay. So if you are registered as a limited liability company, your taxes goes to Federal Inland Revenue Services, your company income tax. But mind you, the federal government of Nigeria just made a law last year that says that if your turnover in the year is less than 25 million, you should not bother to pay company income tax. So you can imagine if FIRS decide to, if you're a limited company and the FIRS decide to come to your company to now tell you that you are going to pay them a tax of 30 million naira. I said, no, I'm a small business. They say, okay, show us your book. Let's be sure that you're a small business. You see that it's important for you to keep your records. From your bank account statement that we got, we noticed that you made more than 25 million. I say, oh no, it's when my brother was traveling abroad and I wanted to help him pay for a flight. He now transfer all the money for the flight to and I said my own account was having issues, so I gave business account. Do you see why you should separate the things? Because you can be taxed unnecessarily on what you are not supposed to be taxed on when you mix things together. So let your business be business, let your personal be personal. And you heard from the account, it's okay from trying to withdraw, if you want to get money from your business, but it's called drawing, like you are drawing something from something. But it should not be the one that will kill your business. And you must write it down. My drawing as so day is like this. We are going to have a more robust accounting session in the advanced class. So there's an advanced mentoring program where we deal more with the bookkeeping and accounting. So accounting is very important. When I'm not teaching you these things because I want you to become an accountant, but I'm teaching you so that when your business becomes bigger, you can interact in a very intelligent way with the accountants you employ. But if you don't know, then you don't know. They are talking, you are looking at them. All they do is that, Oga, sign here. And usually they tell you and you just sign. That is the reason why some people get into trouble, because they don't even know they are right from their left, and they don't even seek understanding. You are better from such people because you are seeking understanding and you also have a mentor. It's my pleasure to take your business from where it is to where it needs to be. So you need to do proper, like I say, proper recording. There are some trainings I've done on more high-level training, more detailed training on finance, business finance and accounting. Then we're going to use it. I'm going to give you some of these for free for those who are in my mentoring program now. But for those of you who are not there or you are listening afterwards, this promise is not for you. All right. So I'm going to send you some things to listen so that it helps you better understand these things. All right. So we've spoken about company income tax. So they are about, I want to tell you the basic taxes that are available. We have the company income tax. Please write it down. Company income tax. The next one is personal income tax, PIT. The first one I mentioned is company income tax, company income tax, CIT, company income tax. Please write it down. Company income tax. Hopefully we'll finish this thing in the next 20-30 minutes max, okay? So the next one is personal income tax. PIT, personal income tax. Another tax you should be aware of. Is payee, pay as you earn. That one is for staff, for your staff. So you are running one-man business, maybe a fashion house, only you. But now you have like 10 staff. You should start talking to them about paying their taxes. And sometimes you used to think that those taxes are so huge. Sometimes they are so little. In fact, the federal government has even made another law in Nigeria that any staff that is earning less than 30,000 naira in a month, don't pay tax, don't do payee for them. See, I'm not praising or singing their praises, but they've done a lot recently for small businesses. A lot for small businesses. So if a staff is earning less than 30,000 naira, the government said that don't bother removing their tax, let's leave them alone. But if they are earning above that, if they are earning above 30,000 naira in a month, then they have to pay tax. So their own tax is called pay as you earn. P-A-Y-E, payee. Payee, P-A-Y-E. So the recent, please, if you have a question, just type it in the comments in the chat box. I'll take it, okay? Payee. But recently, like last year, December, they just changed the law again and said that those who are earning less than 30,000 naira should not bother doing payee. So if you have this knowledge, if a tax agent just come to you and say, oh, you are doing sewing, why is it that you are not doing payee? You let them know. The federal government says anyone that earns less than 30,000 naira should not do payee. That's if you are in Nigeria. So that is the difference between you and those who don't know. Those who don't know will probably be running around and be, jittering for nothing. So that's that about payee. So anyone that earns above 30,000 a month and they are your staff, they're supposed to pay payee. And there's a way to calculate this payee. It's on yemisiadeyeye.com. yemisiadeyeye.com. I'll share the link with you. yemisiadeyeye.com. So there's a way you just click onto it and calculate the tax. Okay. All right. So the next one, I've spoken about company income tax, personal income tax, payee, then VAT. VAT is value added tax. So write it down. Value added tax. Value added tax. I've seen a question from someone. I'll read it after talking about this. I will not lose my line of thought. Okay. Value added tax. The fifth one that I would like to talk to us on the basis of this training is withholding tax. Withholding tax. So withholding tax is just like okay, you have a coin, and a coin has two faces. So if someone buys from you, okay, if you buy from someone, maybe you buy something you need in your business from someone, they are supposed to remove that, okay? But if someone buys from you, the government said that you can help us, you can help us withdraw that VAT. So if the person pays it directly, it's called VAT. If you that they buy from, you help them to remove it, it's called withholding tax. Okay? Withholding tax. All right. So there are some laws about VAT too. So I'm going to say some things about these things quickly. All right. So let me say something about company income tax. So I've told you that the FIRS, the body in charge of tax collection in Nigeria, they are the ones that limited company pays to them. Okay. But the government now said that anybody earning less than 25 million, don't bother paying. If your turnover in 1 year is less than 25 million, no matter how much profit you make, don't bother. We don't want to collect anything from you. Just go and grow your business. Okay. So now you know that one. But if you do a turnover of more than that, you are going to pay company income tax. So if you do between 25 million and less than 100 million, it's 25%. If you do 100 million and above, it's 30%. So when you put your profit together, you just cut it with knife. 30, you just give government. Bam. Someone is like, it's too much now. Oh, that's the law. Okay, that's the law. All right. So if you do above 25 million or less than 100 million, you just cut it into 4 places and give one to the government. And that's why you need to learn something called. So what we are teaching you in this class is the ways you can run your business so that you do the right thing and you will not do the wrong thing and get into trouble. Okay. So there's something called tax and tax evasion. So tax avoidance is lawful. So you can plan your tax in a way that you'll be smart about it and you don't break the law. You avoid some taxes. And if you are supposed to pay tax and you are running away from it, it's criminal. So tax evasion, it's a criminal offense. So being a business owner, you need to really, really understand what are the right things for me to do so that I will not commit a crime. Because when there is a crime, you will be sanctioned. You don't want that, okay? You need to understand. I spoke about VAT earlier on. Let me move to VAT now. I said that there are different categories of VAT that you pay as a business owner or that your business belongs to. So there are some who are VAT. Like I said, when you come to the hospital, any hospital you attend in Nigeria, you will not see VAT in the charges because the federal government has exempted you from paying VAT. So I don't collect VAT and I don't pay VAT, okay? So that's that. Or another business that is VAT exempted. There are some other businesses that are VAT exempted. So I'll share it with you. So check, is your business VAT exempted so that you know. So nobody's come and harass you. You didn't pay VAT. Just tell them I'm VAT exempted. But there's also some rules that got VAT exemption. So if you have VAT, okay. The federal government of Nigeria also said that if you make a turnover of less than 25 million, don't pay VAT. So you see that small businesses, the government just wants you to grow, 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 and grow. So you don't pay VAT, you don't pay company income tax, but you pay your PIT. So if you make profit, so where does PIT comes in? PIT is personal income tax, which is paid by business owner. And how do you get this money to pay? It's just saying that after doing all your businesses for a year, you now look at, you remove all your, you look at all your income, your revenue, you remove all your expenses, company expenses. The remaining one is profit. And if you have business partner, depending on how your shares are, maybe 40-60 or 50-50 or whatever, or if it's only you, you take the profit. So the government is saying that from your profit, they want a part of it. They want a part of it. So, and that's what PIT is about. So you're going to pay PIT, and there's a way to calculate it, and it's also in the book I'm going to give you. Okay, the manual you get. Okay, all right. So the another thing we've not spoken about. We've spoken about company income tax, PIT, payee. I've spoken about payee. You calculate it. The calculation of payee and PIT is similar. It's just that payee is from monthly staff salary. They will pay the government. So you remove it and you pay the government on their behalf. But PIT is an annual thing. So they expect you to have finished your transaction for the year, see your profit and see how much you give them. So you calculate it based on the ways of calculating it. There's also already a template. You can just put in the figure and it will tell you how much you will pay. Then I've spoken about VAT and withholding tax. All right, so that's like tax in a jiffy, in the like a short summary. All right, so but let me tell you all something, that sometimes the taxes we run away from, they are not so big like that. So just know today that you can do it, because you will need tax clearances for some great things you want to do in your life. You don't want to go around and be paying money you're not supposed to pay. So please keep your records. If you have any question around these things, just ask me. It's such an amazing time, learning time. And someone is like, oh, I thought entrepreneurship is just a piece of cake and no work done. No, it's a lot of work, but it is beautiful because you have benefits, and it is a benefit that you can even give or pass forward to other generations. If you become anything in government service, where the day you leave, that's the end. You cannot give that position to your daughter, your son. If you study anything, the day you leave Earth, that's the end of it. Nobody can use that certificate for anything. So, but this that you are doing, oh my God, in the next 5, 6, 7 decades, it still existing, become bigger, and your picture is on the wall like 200 years to come, and they are remembering the founder. How beautiful it is. So this is what makes entrepreneurship very, very beautiful. So I hope we've been able to do some justice to today's training.